Hello guys, welcome to another follow-up video on the Nifty Wheel performance. So what we have seen in our previous video is the performance of the Nifty Wheel up to 31st of August 2023. So that is 8th month of 2023. In this video, we will see the performance up to 28th of December 2023, which is end of year 2023. If you have missed the previous video, the link will appear on top of your screen above. Okay, let's dive in. So what we saw in the last video is up to 31st of August, as I told. So the profit was about 97,932. If you see in the last video, I have told the profit of about 1 lakh rupees. Why it is little less? Because I got a lot of comments on the previous video that I missed out on the charges. Basically, when you do a buy and sell of Nifty Bs for this large quantity, you have significant amount of charges which will be coming from the exchange side. The brokerage is nothing because this is delivery based trade, right? So the brokerage is eventually zero for me. Most of the brokers, not the full-time brokers, the discount brokers now provide free delivery. Means there is no brokerage involved on the delivery trades. For intraday, yes, but on delivery, no, they don't charge any brokerage. So what I have done is I have calculated the charges what we incur during the selling, because buying and selling I put together. These charges are basically done in two parts, but whenever like we are selling, I am putting all the charges together. Okay, so I have added those charges. That is why means you see the profit amount from 1 lakh, it is reduced by about 2100 rupees. Okay, so I have done that for all the other trades. So let's go through the performance from 1st of September up to 28th of December. There are trades continuing because I have kept this till the end of financial year 23-24, because we started in financial year 23-24, which is 31st of March. I have started this trade with the series of 6th of April 2023 expiry series. So that is the first expiry of FY 23-24. So now I'll go through till the last expiry of FY 23-24. The next follow-up video will be after 3 months at the end of this cycle where we stand. Okay. So by going for the performance, what we have seen from 1st of September up to 28th of December. So when we ended the last video, we had Nifty Bs 4650 quantity purchased at 213.56. So this is what was our outstanding position, and there was no call rating against it because this call we closed at zero. So when the profit in the last video was about like 97,932. So we started the February series, sorry, the September series. The first one itself means when we sold the CE, what CE we sold 19,500 CE, but the market went up and closed at 19,727. So the CE became in the money and we book a big loss in the CE. How much loss we booked? We booked 8,452 rupees. But what happens is you have the underlying, right? So you will be selling the underlying at this price. While booking loss in this CE, we will be booking profits in this position also. So from 213.56, since the market has gone up, what was our purchase price? Our purchase level was at 19,381. So the market has gone 400, about 350 points up. So that 350 points has been captured here. So the profit on the underlying Nifty B sell was about 17,344. And how much loss we booked? We booked the 8,500 rupees loss in the covered call, and we incurred a charges of about 2,300 rupees. So put together, say 10,700 rupees was the loss side, including the charges, but we booked a profit of about 17,344. So that brings the profit figure above 1 lakh. So this was the starting point. Then next week, the put, once we are out of the underlying, we start selling the put. The formula is same, means there is no big difference. If we are like less than 50 points from the round figure, we go to the next strike. So this is less than 50 points from 19,800. So we went to 19,700 PE. We sold at about 39 rupees. It went to zero because the market zoomed up above 20,000. That was, I think that was the first time it went above 20,000, I believe. Yeah, we crossed the 20,000 mark somewhere around mid of February. We crossed. Okay, so then the very next week we went and sold a PE because since it is next day the market was up, so it is 2192. So 2192 means we are coming down 100 points. So say 2100 PE we sold, but the market crashed and it came to 19,742. So 44 rupees we sold the PE. That PE became 357 rupees. So what we did, we booked a huge loss of about 15,682. So this is the answer for our members, means who were asking that if we sell a put and if the market cracks by 300-400 points that week, what we will do. So this is the answer for it. We simply book the loss. It is one lot only. So even the market from 2192, this is the level like we sold the put, right? So 2192, from there it came to 19,742. So what is the difference? So 2192 minus 19,742, so 450 points. Okay, so 450 points, the market has cracked here, 450 points. So how much loss did we incur? 357 rupees minus 44. Okay, means this 44 is always ours, so this minus 44. So what we lost for one lot is about 15,682 rupees. At the same time, what we do, we go and buy the Nifty Bs at 19,742 levels. So when you are covered with the cash for buying the underlying, selling a put is not very risky. It is risky on the continuation pattern. If you buy the Nifty Bs and the market started going down, then you have a trouble. That has also happened. So what has happened? 44 rupees went to 357. So minus 44, consider that we booked somewhere like close to 314, 315 points loss we book here. So 15,682. Then at the same time, we go and buy the Nifty Bs at 217.63. This is the close price of Nifty Bs on expiry day of 21st of September. Okay, all these prices you can go and check in the NSE website or any broker. You will find the same price because I am also taking from the same place and putting. Okay, so the capital used was about 10,000 rupees or 12,000 rupees. So here we momentarily came down from that 1 lakh profit to about 90,800. These are temporary. Okay, then you see what has happened. The next week onwards, the market continues to go down. We bought the Nifty Bs at what levels? 19,742. So you say 19,700 is your level where you cannot sell a call below that. You have to sell a call at 19,700 only, because if you are selling below and if the market recovers, you will be selling these. You will be selling these at less than this price. So you will book loss in the call and you will book loss in the underlying, so which is not recommended. So you will be booking loss in one and you will be always booking profit on your underlying only. You will not book a loss here. Okay, so what happened? The market continues to slide down. You can see from 19,742 it came to 19,523. Since we have the underlying, we will sell the call. Okay, we will be selling the call of 19,700 only. We will not be selling. First week we sold 19,800. We can always sell above. We cannot sell below 19,700. We can always sell above 19,700. So what we got, the market closed at 19,674 that week beginning. So when you see, as per our formula, we have to sell. If 50 is above that round strike, we will be selling the next strike. So 674, it is, if you add 50 to it, so it will be more than 700. So we will go to 800. So when we sold 800 at 53 rupees, the market did not go to 800. Okay, it did not go to 700, 800, nowhere. So we keep on like eating away all these premiums. Then it came a certain point where the market went below 19,000. Below 19,000. So we can sell only 19,700. We cannot sell anything below. Only 19,700 call we can sell, because that is the level which we bought our Nifty B. So then what happened? All these weeks we have been eating premium because the market started coming down. Then at this point, when the market went down to 18,857 and the next day it was about 19,000 levels, we had the expiry series opening, and we cannot sell anything below 19,700. And what was the premium available on 19,700 CE? 2 rupees. Just 2 rupees was available at 19,700 because the market was so bearish and only 2 rupees was available. I had to sell the 2 rupees. So I sold the 2 rupees and I collected just 107 rupees of premium, because 2 rupees, consider we are selling like 50 quantity, how much you will get? 100 rupees, right? So in this, we will lose a brokerage of 20 rupees. Okay, brokerage I have not put in, but for every trade, if it is 20 rupees, if we are closing, it is 40 rupees. Okay, if you add that, it is minor only, but that is okay. 2 rupees we got. So that week the market closed at 19,133, so below 19,700, so it became zero. So we eat this premium. The next week 19,230 was the level where we opened, so we had to sell at 19,700 and above. So we again sold 19,700 for how much? 3 rupees. So people who are asking that what is the risk associated with the wheel strategy, this is the risk. You have the underlying which is bought at a higher level, say 19,700 levels, you go and buy the underlying, then the market started going down. You can initially you can sell calls for decent money. Say initially we started selling at how much? 53, 63, 32, 35, 30, means the market is going down. So up to 30 we could sell. Later, we don't have any reasonable premium. 2 rupees, 3 rupees we were getting because the market is so low and your underlying is in very heavy loss, but you are not booking any loss in your underlying. The market forever cannot go down, right? So there is no war kind of situation, no emergency kind of situation. Politically, we are very stable. So there was some concentrated selling happened. So the market came down from the levels of 20,000. There was a huge profit booking and the market came down. Eventually, the market will recover, which is what has happened. Coming back to our strategy, what has been happened that 2 weeks we could not get enough premium, but still we hold our underlying because the market started recovering. We hold the underlying. We started selling 19,700 call against it. 2 weeks we received hardly 100 rupees, 160 rupees. Does not matter. Eventually the market recovers. So that week, 10th of November, when we started for the 16th November expiry, the market started at 19,425. This was the close on a Friday. This was the close of Friday. So Friday evening we sold 19,700, but this time we had a little decent premium of about 9.8, about 10 rupees we got. 10 rupees means how much we received? 500 rupees, right? So we got 107, 160, then 500 rupees we received. Then what happened? The market recovered fully from 19,425. See, this is the first day close. The previous was 19,395. So from 19,395, that weekend, the market closed, that expiry Thursday, it closed at 19,765, which is above 19,700. So it is 65.2 was the settlement price. we sold it for about 10 rupees. So consider that 55 rupees we will be paying. So that is the loss we are getting. So when we get the loss on the sold CE, what we do? We close our underlying, right? So that is one of the reasons why we do not sell anything below 19700, means which is our purchase level. So what happened? 19765 it closed. So when we close the sell in the loss, so which is went for the settlement, so 65.2 it got settled, so 55 rupees we lost there. And when we close our underlying, we bought at 19742 and we sold at 19765. So when we sell it at 19765, we have sold it at a little higher price than what we bought for. So this is very, very important. So you have to always sell at a higher price your underlying, not at the lower price, because you are booking loss here, you cannot book loss here. Here you have to book a profit, right? So 19700 only you have to sell, you cannot sell anything below that. Okay, so there we got a profit of about 3500, very minor, because almost the same levels we are closing the positions. So here again the charges, because huge quantity, right? So the charges, STT, delivery charges, these charges, that charges, everything will come. So all put together, this is the charge. So we again back to about 1 lakh rupees. Now we don't have any underlying, we don't have any options outstanding. Then what we do? Turn the wheel again, go and sell PE, right? So that is what I have done. So since we don't have any underlying, we can sell whatever is the PE available. That week the market closed, or that day, Friday on the 17th of November. So the market closed at 19717.85. So minus 50. So it is below 700. So we go to 600. So 19600 P we sold for about 34 rupees. That became zero. Next week again we started selling PE. When the market goes up or goes down, does not matter. We keep on selling the PE as per the formula. Okay. We kept on selling. 4 weeks we eat the premium. On the 5th week, the market was so high, 21,182 it closed. Next day it opened a gap up, 21,456. 21,456 was the close on 15th of December. That day we went and sold 21,400, because if you do minus 50, it is more than 400. So we sell 400. Okay. So we sold 21,400 PE, one lot at about 79 rupees, because it's almost ATM, right? So almost 79 rupees we got. But that week the market came down. So when it came down, it came to 21,255. So this premium almost literally got doubled. So we lost the same money, means what we wanted to take as a premium, the same amount of money we lost. So we lost about 3,300 rupees. We have collected so much of premium, and 1 week we lost 3,300. When you book a loss in PE, what you do? You go and buy the underlying. And when you buy the underlying at what levels? At this levels, 21,255. At 21,255, the Nifty B's price has gone so high, it has gone to 234 rupees. Go and buy 4650. Now we are almost close to 11 lakh rupees. We have put in 11 lakhs. We started with what? 9 lakhs. About 9 lakhs we started. Now we are at about 11 lakh rupees. So we put in 11 lakh rupees, and now since we booked the loss here, so the profit came down a little bit. We were at 1,10,500 rupees. So we came down to 1,07,000 rupees. Okay. Then the very next week, once we have the underlying, we sold a call. So the market closed at 21,349.4. So 21,349, you add 50 to it. So we are still below 21,400. So we sold 21,400. And this 21,400 was ATM. Okay. So we sold the ATM one. We got a very good premium, but the market bulldozed all the levels and it closed at almost at the all-time high of 21,778. This was the expiry for the end of the year. The market closed at almost the high point of the year it closed. So 21,778 was the closure. So how much? This option premium became 3 times, right? So exactly 3 times it has become. So 2 times of the option premium we lost. How much we lost? We lost about 12,647 rupees. Again, this is another lesson. You sell a call, the market goes higher. You have a huge loss in the call. My God, this is very risky. No, you already have the underlying. You bought the underlying here, and you bought at what levels? 21,255. Now where the market is 21,778. So the underlying would have gained, right? So you go and sell the underlying because you are booking loss in the call. Huge loss you are booking, about 12,000 rupees you are booking in the call, and you sell your Nifty Bs for about 5.5 rupees to 6 rupees of profit. So you bought at about 10 lakh 90,000, 91,000 rupees. Now you go and sell above 11 lakh. So you sold it at about 11 lakh 16,744. So you got a huge gain, 500 points. The Nifty has gone up by about 550 points. It has gone up. So you book a big profit of about 25,000 or 26,000 rupees. So together, how much profit you have booked? You have booked about like 10-12,000 because you lost 12,000 here and you gained 25,000 here, and these are the charges. So to put together, you have got about 10,700 rupees of profit. So from 1,07,000 you came to 1,70,000. Right now you don't have the underlying with you. Then again what you do? You go back to selling a put. So that week 29th of December closure was 21,731, almost very near 21,731. So minus 50 is below 21,700. So we go to the next strike of 21,600. I am avoiding the 50 strikes as I told you in the last video. I am doing only the round strikes, 100 strikes. Okay. So it is below 21,700. So we go to 21,600 P, and we sold it at about 64 rupees. This was a roller coaster. Now it is showing zero, but you consider that it went up to 400, then it came up. Then by the end, when it closed at 658. So this 600 PE became zero. Okay. So 3,200 rupees we ate the premium there. Then the coming week or this current week, what is happening? This is like 11th expiry. So today is 7th. I am recording this on a Sunday. So today is 7th of January 2024. So we still have this option open. So the market on Friday, it closed at 21,710. So 21,710 minus 50 below 21,700. So we go again 21,600. This time we got it for about 56.5. So we collected about 2,825 rupees of premium right now. So right now the profit in the Nifty Wheel Strategy is running at about 1,23,894. So say 1,24,000. But the up to the December, the financial year, the profit is about 1,17,842. So this is a big lesson for all those fear-mongering traders. If we sell a PE and the market crashes by 400 points, 500 points, huge loss, huge loss. No, if you have the underlying, you are not going to lose a huge money. Where you will lose a huge money is when you realize a big loss in the underlying, because you are putting 10-11 lakhs, right? So like this, if the market goes down, you buy it at about 19,742 and you see that the market is 1,000 points down. Okay, 1,000 points from here to here, almost 1,000 points, right? 900 points down from here to here. So what will be your underlying price? About 204, 205 rupees here. This is what is going to give you a big loss if you realize it. But when Nifty Wheel is running, we are not realizing the loss what is happening here, but we keep on selling the call at that buy level. We are not selling anything below that. We keep on selling. Eventually the market will recover. When it recovers, you just book a loss on that week's call sell, and then just close your underlying, because the market has recovered enough so that whatever buy price you have got for your underlying, all the losses got recovered and it will return a profit also. And if You sell a CE and the market jumps or the market rallies, does not matter. You are covered with your underlying. So if the market, after you go and sell a 2400 CE, when the market closed at 21,349, at that week, if the market rallies 300 points or 400 points and it closes well above your 378 points above our sell strike. So how much we lost? 378. No, we have lost 378 minus what premium we received. Okay, this has tripled, but we have lost double the money. We could have like gained 6,000 rupees here, but we lost 12,000. But what we gained? We gained 25,000 rupees in the underlying. Okay, everything balances out. So don't fear too much. If you are holding cash, means you are covering your option positions. If you are selling a put, you are holding a cash of about 10 to 11 lakh rupees. If you are selling a call, you already have the underlying above the call sell price. Okay, or sorry, below the call sell price. Means if you are having it at 19,700 and you will not sell any call below 19,700, you will sell 19,800, 900, no problem, but don't sell 19,700 below. If you sell anything below 19,700, you will be booking a loss here. Okay, you book a loss here, you book a loss here. So the strategy does not work out that way. So you have to always sell at your Nifty B's buy level, index spot level. Okay, so that's it for today. So I hope the explanation what I gave about the strategy is still valid. If you have doubt, just go back to the video, just rewind it and then watch again, that if the market crashes after you buy the Nifty B's and if the market rallies after you sell a call against the Nifty B's, both the situation has happened within this last 4 months. This is what is the strategy, but the strategy still gives profit. Even all those hangama, whatever happened from 79,000, right now for the year's close, I am sitting at 1,70,000. Means from here to here is about 20,000 rupees gain. ठीक है, हो गया ना? So this is what is the strategy will provide, and your current capital what is used, you say 11 lakh rupees has been used. So what you have gained is about 1 lakh 18,000 rupees. So which is roughly about 11%. 10 to 11% gain is there. This is a very conservative strategy. Okay, we are doing with one lot. Very conservative strategy. So 10 to 11% easily beats your FD returns and some of the mutual fund returns. So this year mutual fund may not beat, but FD returns definitely it will beat. And I am calculating along with the charges. Okay, but many people have commented that I am missing out the charges. There are huge charges. Oh yeah, huge charges. Yes, every time 2,000, 2,500 rupees charges. But the gain what you are getting on the underlying while selling will outweigh all your charges. What are the charges here? 26,000 of profit, 2,500 rupees of charges, 10% charges. Okay, again 17,000, and this charges does not change too much because the amount is anywhere like 10 lakh, 11 lakh. It is about like 2,000 to 2,500 rupees of charge. You can say we started off with 2,000 rupees. This is our first charges, where it's about 9.5 lakhs, so 2,093 rupees. When we come to 10 lakhs, it is about 2,200 rupees. And when you come to like 11 lakhs, it is about 2,400 rupees. So these are the charges for every buy and sell. But you will not be like buying and selling frequently every week like this. Okay, this is 1 week where the market moved so much, so we had to do that. But generally, like you will be doing it like monthly once or 2 months once. Like here, if you see, September we bought, and when we sold it at almost like mid of November. Okay, mid of September to mid of November. So this is one every monthly once you will do that. That is what it has been showing. Like you say May, like May 12th you buy, and then when did you sell? June 23rd. So it's about 1.5 months. Then again, when did we buy? 28th of July we bought, and when we sold 1st of September. So again, like July means August 28th, September, 1 month, right? So it's like 1 to 1.5 months. So here again, 15th of September and it is 10th of November. So this is about 2 months. So it goes like that. This is one place where we bought and sold in the very consecutive weeks. Like say 15th of December we buy, and then by 28th of December we simply close out the positions because the trade did not work out, the call sell did not work out, it went to huge loss. So your underlying also gained huge. If you are booking a huge loss in the call, you will be booking a huge gain in the underlying. Okay, that needs to be understood. So that is what it is. That's it for today. So I'll catch you up with the next video on this closure. On 28th of March, we'll be closing the financial year and we will be closing this strategy and moving to 24-25. So then we will start our strategy on the April expiry and we will continue till March 2025. So I will catch you up with the video on that. Take care. All the best. Signing off. This is JR. May the markets be with you. Thank you. Bye bye. Thanks for watching. If you like our content, please subscribe to our channel, like and share the video. Thank you.